We may not be hearing about SEC enforcement actions under the Trump administration as we did under the Obama administration, but that's not necessarily because there are fewer of them. It turns out that the SEC is issuing fewer press releases about sanctions and fines against hedge funds and banks than it did under the last administration. Here to explain why is Bloomberg's SEC reporter Ben Bain, who has a piece out on the Bloomberg today. Ben, welcome. It's a very, very interesting piece. So the basic question I have, of course, is are they suing less? Are they pursuing people less? Or are they doing just as much and just being quiet about it?
So we're about 8 months into Chairman Jay Clayton's tenure at the SEC, and what we've seen so far is a chairman who says we're not going to be suing people less, we're not going to be going easy on Wall Street, and sometimes it could take a couple years to actually take stock of what I'm doing. But what we have seen is in the first, basically through September, so the first kind of 4 months of his term plus the end of the last term, we did see a decrease in fines by about a third over at the SEC. And as we point out today in this article, we're also seeing a change, an apparent change in how cases are being publicized and which cases are being publicized. Under previous chairman Mary Jo White, Wall Street firms would also often complain about getting called out for what they considered minor infractions. And what we've seen so far, initially at least, is that some of those same types of cases, are not getting the same press release treatment that they got under Mary Jo White. So it's not to say that enforcement's not happening, but it does seem that there's a bit of a shift in terms of how those are being publicized. Now, Clayton, for his part, sorry.
Go ahead.
No, so Clayton, for his part, I mean, has come out really strongly about what he calls, it basically says are violations that target retail investors, or Mr. and Mrs. 401k, as he said. So the agency has done a lot of press release work around, Ponzi schemes that target retail investors, and also increasingly on cryptocurrencies.
Right. So we can actually see clearly the power of these press releases. On your story, the chart 9559 just showing you how Goldman Sachs sank after the SEC announced a case back in April of 2010. That's just the intraday chart. Is there being also a change in how they settle the cases, on how they admit to guilt or wrongdoing?
That's probably a little too early to say. I mean, we're still kind of in the in the initial months here to know exactly how that process is going to play out. We have data from a few months towards the end of last year, because we get kind of the end data of the fiscal year in government, which ends in September, and there was a dip in that fiscal year. Chairman Clayton was only in there for about 4 months, so I think we'll have a much better idea come September of this year, whether there are less settlements happening, whether fines have really gone down under his tenure. But yeah, I mean, as you point out, I mean, the kind of naming and shaming of a press release does have an impact, certainly when the SEC does it, and that case is a really good example, I think.